YouTube, what's going on? I hope everyone's having a good weekend. Just wanted to do a quick video on the falling wedge and how I go about trading it, how I create the plan, and how I trade the plan, right? Anytime you find a setup, you always want to make a plan, and by making a plan, you want to draw out where you're going to enter. You want to draw out your stop loss and your price target. When the market opens, you want to have an exact plan. You want to know what you're going to do before the market even opens. That way, when the market opens, you have no guessing to do. You have an exact strategy to follow, and you know exactly what you're going to do. It takes out guessing, it takes out emotions, and it lets you just focus on the setup and focus on making the best trade possible. So, falling wedge here, my favorite setup to trade, has the best risk to reward in my opinion. It's a continuation pattern. Right, it's an uptrend with a little area of consolidation. Price tends to consolidate inside the falling wedge, and it results in a nice explosive move to the upside. So how I do it, right? So I have my level of resistance above, I have my support below. How do I plan my entry, exit, and stop loss? So first things first, I always have my stop loss below the low of the support, right? So this low here is the bottom support. I always set my stop loss below this level just so I don't get stopped out in case the market pulls back a little bit and then fakes out to the upside, right? There's always that fake out to the downside before the move to the upside. Market movers, institutions, banks, hedge funds, they do this so they can pull out all the retail traders and take their positions, right? They want as much liquidity as possible, and they want a better price before, moving the market in the direction they want. So I always move my stop loss, a little bit below. It's going to result in a little bit of a bigger drawdown if it does happen, which is why you always need to size smaller than you think. So stop loss below. Entry point, I always have right at the high of the previous pivot point. So here's my entry point. I'll highlight this in green, right? So entry point is always here, right? This is the safe entry point. I always like to do it at the break of this diagonal trend line. It's a little bit riskier, but if you enter here, you enter before the implied volatility spikes, and you end up having a larger win if it does break out, and if it loses and comes back down and hits your stop loss, you lose less. So this is why I like to enter before confirmation with a break of this zone here. Regarding price target, always the top of the triangle, right? So I'll highlight this in yellow so we can determine or visualize where the price target is, right? So now we have a plan in place. When the market opens, we know exactly what we're going to do, right? So my specific entry point is going to be right in this region, right? I always like to enter a little bit early. I have a little bit of a higher risk tolerance, so this is why I do that. So I enter right in this region. Okay, so now let's hit play, see what happens here. Right, so market opens, it spikes through. I try and enter as early as possible. I get a fill right here, and it moves up through the main entry point. Let me turn this a little bit slower. Let's see what happens. Let's go through it step by step. So notice how, right, if we entered right here where most traders are going to enter, it pulls back, and now people start to freak out, right? Because retail traders aren't necessarily the most experienced traders, and right, you get stopped out, right? You see red, you see, minus 10, 20%. And you sell your position because you're not following the chart. But since we have a plan in place, we don't sell because our stop loss is down here, right? We have an established plan in place. Hit play, see what happens here. Okay, so notice how, right, we broke out, we pull back, and we retest. So this previous resistance now acts as a new support. See what happens here. We start to consolidate a little bit, we move sideways. Traders, retail traders now are getting scared, right? They're like, oh, it's not going to go up. See what happens, right? We start to consolidate sideways. Data is burning. Our contracts are losing value. And do we get the break? Let's see what happens, right? We start to consolidate, and boom. We get that push up right below our target hit. See what happens. Continue to hit play. One thing to note at this point, since I entered down here, I'm now going to push my stop loss up to my entry point, right? So now I have a risk-free position. It comes back down to my entry point. I'm going to sell my position at break even. Once it hits my profit zone, I'm going to cut half my position. Right, so at this point, I'm going to cut half my position, and I always close my position when we're pushing to the upside. That way, I get a better fill on the ask, and right, implied volatility is on my side. There we go, cut half my position, and as always, I always move my stop loss up. That way, I'm risk-free. Right, you always want to manage your exposure to the market. Speed this up a little bit. And there we would have been stopped out, and that would have been an amazing trade. So just a quick video on how I would trade the falling wedge. If you have any questions, let me know. Make sure you drop a like on the video. I'm going to be doing a ton more of these videos and covering a bunch more setups. You know, if you have any questions, let me know. Make sure you drop a comment, ask me anything. I do one-on-ones, and I'm a very active trader in the BullTrades Discord. So hope you have a good one. Hope you learned something. Have a good one, guys.